Okay, let's give this a try. I was recently on TikTok as a quick intro to or as a quick update to my social media following, and then one of the comments was, why don't you go to YouTube and rather do the content from YouTube, because it'll be a better user experience, and also it allows my YouTube members who are long-time fans of mine to also get some good value. So today I'm just doing a quick live deal analysis. If there are any questions, please shoot them in the comments and I will get to them as soon as possible. Otherwise, if you want to know more about how I analyze deals or how I help other investors get started in the property game, hit me up on the link in the comments or in the description below. I do have a coaching and mentorship program where I hold your hand through the buying process, whether it's your first or next investment. I help you make an informed decision. So today I'm going to be analyzing a couple of investments. I am looking to make my last acquisition of the year, and there's a couple of auctions coming up. There's a few off-market deals. There's a few deals that are going on foreclosure. Motivation's high right now, right? I think that's just the state of the economy. We've got low economic growth, high interest rates, and sellers are struggling to meet their obligation, meaning they're forced to sell a lot of the time. And when you've got that high level of motivation, that's where good discounts are to be had. Okay, so obviously I can't share with you too much of the details of the deals that I'm looking at, because these are deals that I'm busy working on, and if I share too much IP, people would be able to take these deals and run with them themselves. So I'm going to just show you the process of how I go about analyzing these deals and what my decision making is in terms of reworking the numbers to get the yield that I want. Okay, so the first one is a building that's going on foreclosure. The asking price is 8 million, which is obviously crazy. The seller is completely deluded, but this building it'll go to auction or it'll go to foreclosure in the next sort of 3 to 6 months. So I don't really have to wait too long. I think that the seller will eventually default sufficiently enough that the bank starts to chase him for money. So I'm going to go with a 5 million offer. I've got 560 for transfer fees, which is a little bit high. Let's go 480. I've got renos of 1 million because there's a lot of work to be done on these buildings. It has been completely run down and dilapidated, which is just a sign of a very delinquent seller. I'm going to work on 70% loan to value because the banks already had a look at it and they're pretty happy with it. It's right up their alleyway in terms of what they're looking for. I might even go 80% loan to value. It's making 120,000 in monthly revenue, which, does that sound right? 120, so that's 4.4 per unit. Yeah, that's a fair amount. So that's 144,000, 1.4 million in annual revenue. And let's see, that will give us a gross yield on total cost being 7.13 of 20%, which is great. Yeah, that's fantastic. So bank finance, we're looking at 4 million to the bank. In terms of overview, let's see how much cash flow this baby's gonna make. So cash flow, we're looking at 252. And my return. My return is sitting at 18.45, which is my internal rate of return. My net yield is basically break even because I'm quite highly geared on this one. And my MPV is 7.5 million. So this meets the minimum criteria of my investors. Each investor is different. Obviously, you have to make sure that you understand what your requirements of your investors are and then only present them deals that make sense. But this one meets that criteria. So 5 million is my max purchase price on that one. In terms of some of the other indicators that you can find on this app which help you make an informed decision, so you obviously have your overview tab, which shows you your gross revenue, operating costs, your provisions, your tax, and your cash flow, depending on whether you want to be optimistic or pessimistic. Then we have the returns tab, which is looking at your internal rate of return, your net yield, your cap rate. We looked at that already. Let's look at our equity to debt ratio, which is also quite a nice graph. It shows you the capital growth of the property versus the outstanding mortgage or bond. Okay, then we have my project cash flow, is probably my favorite graph because it shows you the most information. It gives you a really good sense of where your property is tracking. Nice, much more clear. Thanks for coming to YouTube. You're welcome, man. So here you can see the project cash flow that obviously we have a massive cumulative outflow in the beginning, and year 15 onwards we have cumulative profit. So it's takes us 12 years to get to a profitable stage where we have paid back all of our initial capital, and then we just have free growth. And then after year 15 we pay off our debt, and then you can see the growth jumps massively. So this is a good deal. Okay, let's move over to the next one. So this is a building that is going on foreclosure. So my banker has given me a little, not my banker, my agent has given me a little bit of info. So I just want to go and see. Okay, so this one has got 12 beds, bachelors, and rooms. Okay, so I need to work out my numbers here, because this is, I think it's a hijack building, because my agent's giving me virtually no information. But based on the 12 beds, bachelors, rooms, shops, okay, the monthly income here will be 60k. Okay, so let's work on 60k, work on 92% occupancy. My asking price. Okay, so if it's making 60 grand, I want to have a high yield. So my max price would be 2.8 million. I'm actually going to go at 2.5 because this is a very risky area. So why would I want to go to a risky area and not get a great yield? That's the only point of going there. Okay, 175k for transfer. In terms of renos, I mean, it's sold vacant occupation, so that should tell you. It's either was a hijack situation or is a hijack situation. But at least there's vacant occupation, so I don't have to deal with any evictions. Let's work on 35k per unit. Okay, so $500,000 rand will definitely get this building up and running, and then sourcing fee of 300. That's fine. Cash flow 60. Let's say rates and taxes will probably be about 2.5, insurance about 2.5, and the rest looks fine. In terms of growth trajectory, I think that's very fair. And let's go here to overview. Okay, does it have a good return? 16% internal rate of return. Gonna have to drop the price here to 2.2 and drop my transfer fees. Let's see. I need at least 17%, if not more. Yeah, here we go. Okay, so I'm just gonna take these numbers now and add them to my other sheet where I'm tracking everything, and that's what I essentially present to my sellers. My sellers, my investors. 500 as a renovation budget. My total cost is going to work out to 3.150 with a gross revenue of 60,000 times 12, giving me a gross yield on total cost of 22.8%, which is not bad. We'll go zero finance, meaning our equity contribution will be the 3.1 million. The cash flow will be decent. I mean, this is going to generate what, 324,000 in annual revenue. It's going to have a net yield of, wow, 10.45. That's really good. A 17.8% net yield with a just shy of 4 million MPV, baby. Yeah, that's not bad, eh? Let's look at our project cash flow tab. It does take a second to load. But here we can see that we get into cumulative profit at year 8, meaning it will take us 8 years of generating revenue to get to a point where we have covered our cumulative outflow. Not bad. And I was super conservative on my escalations. I'm working on 5.5 on rental growth and 2% capital growth. So I'm really not expecting this property to gain value over time. That's not where the money is. The money is in the monthly cash flow generation. Fantastic. Okay, that deal works at obviously the right price point. Let's move on to the next one. So the next one is also a foreclosure. So my agent has given me a little bit of information again. This one's a bit bigger. This one can generate 140 per month, but it's got a retail component as well. So 140 per month times 12 divided by, I'm going to go 28%. So let's go with 6 million is our offer. But they're probably looking for how many retail? It depends how many retail there is. That's the big question. I'll have to figure that out during due diligence. My transfer fees are going to be 620. This one will probably also be a big reno. So let's go with 1 million as a reno budget, and then 600 for sourcing. I think I might actually drop my price to 5.5, just because the area is quite dodge. 140 is revenue, 92% is occupancy. Rates and taxes will be substantially higher because now there's commercial element. Your insurance is going to be quite high. Water and refuse will also be higher because of the commercial aspect. So in terms, I might now push the rental growth to 6% because of that retail component. Okay, what's the total cash required? 7.7 million. Jeez Louise. I definitely want bank finance on this one. Okay, but it works. Let's go bank finance of, let's go 65% at 14.5. That's gonna just jump the return. I just hope that the yield, the net yield is still positive. Yeah, okay, perfect. We found our numbers, baby. So let me just add it to my other list now. So asking price is probably not 9 million. They're probably asking 8 million. They're never going to get it though, not in this economy or not in this market. They'll get it maybe in 2 years' time when the prices drop, when the rate bill drops. Total cost on this transaction is 7.7 million. Total revenue is 140 times 12. So that gives a 21% gross yield on total cost, which is not bad. We're assuming 3.5 million on finance, so our equity in this deal will be 4.1 million. It gives us a net cash flow post income tax. Let's just reload it here. Why is it not working out my income tax number? So my cash flow will be 201,000 post-tax. My internal rate of return is shooting up to 19.56, baby. With basically a break-even scenario on year one with a almost 10 million MPV and 10-year payback period. So all in all, not bad. All in all, yeah, I'm pretty happy with that one. Again, the viewing will be prominent as to whether, these deals are going to work, but they're both foreclosure deals. So, it's not like the seller really has much options. They have to sell. Okay, this is a building that I've looked at many, many times. The numbers should stay the same. So we're working on 65,000. So this is a 3.5 million is the asking price, which is actually a fair asking price, but we're not looking for a fair deal. We're looking for a great deal. You can see that the discount that I'm asking for is 28% with the 500,000 reno budget. On the finance side, we're going to do a cash purchase. It's got 65,000 in monthly revenue, which times by 12 means annual revenue of 780, which on my total costs would be, what would the yield be? 3.525. That would be a 22% gross yield on total costs, which is not bad. Actually, that's not bad. Then we're moving over to our cash flow numbers. So we go to summary, we go to overview. We just have to let the app refresh so it picks up the tax numbers. Let's get our internal rate of return so long. So 17.4%, you see that's tight, eh? I don't mind doing this deal if this was the only really deal on the table, but because there's just so much good stock on the market at the moment, like I'm being a bit greedy, right? Like, what Warren Buffett says is when people are fearful, be greedy. When people are greedy, be fearful. So right now people are fearful, they're running away, they're scared, they don't want to invest too much. And I'm like, nah man, now's the time to really be bullish on your investments. Now's the time to really be aggressive in the pursuit of good returns, because it's during these tough markets where good returns are on the table. Okay, that's a decent deal. Definitely not my favorite. I'd probably rank that quite low. Then we have this one, which is a mixed-use building owned by quite a big property company. I can't share their name, unfortunately, because I've signed an NDA with them, and that prevents me from sharing too much detail. But they've asked for 7 million, which is absolutely crazy. Based on the current market climate, I'm going to go with 4.5 million, and I'm going to work on 420 on transfer. Renault's 350 sourcing, I can go to 450. And yeah, sorry about the hum, but that's just my PC. It's a gaming PC, and it's got quite a big fan on it. Finance, I mean, the bank said they would finance, and they're keen to finance, so let's go at 70% there at 14.5. Cash flow, it's making 100 grand, 94. I think all of these numbers are still the same. That looks good. Let's see what the return is. Yeah, okay, we found our number, and this is obviously with a finance purchase in mind. So, you know, you have to take that into account. You can't just look at a deal that has great return. You have to understand the leverage that's behind it, because if you want better cash flow, put in more cash. If you want better returns, put in more leverage. Leverage is the great, you know, equalizer when it comes to upping your return. Because remember, return on investment is the profit you make with the capital you have exposed. But if you're using the bank's money, you've got less of your own money exposed, so your return will thus grow, right? So bank finance, we're going to look at 3.15, meaning our equity will be 2.5 million. Gross revenue is 100,000 times 12, giving a gross yield on cost of 21%. But that does mean that I need to get a 35% discount, which the problem is they want too much, right? These guys think that this property is worth much more than it is, and the reality is it's not. It's not such a great deal, unfortunately. Okay, let's click save. And then we've got my final deal that I want to run today, which is, funny enough, the same owners. Same owners, but also same building, same PTY. So the interesting thing about this deal, and what I was thinking in terms of making it viable, was to buy this one and the one I just showed you in the same PTY, but instead of buying the company, instead of buying the properties, to buy the PTY, to buy the shares in the property company, because in that way what you can do is you can offset your transfer fees, which is pretty exciting. So they won about 4.5 million for this one, so I'm going to work on 3.5. I think the valuation is about 4.2. Transfer fees of 310. Renos, this property was in shocking condition, so I'm going to go with 750 as a Reno budget, and then I'm going to go with 400 as my sourcing fee. On the finance side, let's run it on finance, right? The banks are eager to finance these deals, and it just puts less pressure in terms of equity down. In terms of revenue, see, now this is the hard one for me, and I'm going to go look for some comparables in the area to see what other people are generating in the same area, and in that way I can kind of get a sense of what my revenue line item would be. I did get some provisions from, you know, the agent, but let's be honest, we can't really trust the agent, right? I mean, I don't trust agents. Why don't I have it now? Okay, I'm just gonna analyze. So we'll go to rent, we'll choose the area, we'll look for an apartment, and we'll look for 3 beds. Wow, okay, that's not what I was looking for. Oh man. Maybe there's no properties in the market for that, so that's why they're giving me other areas. Okay, let's see. Yeah, this makes more sense. Okay, so your 3 beds are gonna probably hover around the 6.5 to 7 mark. Okay, so I'm gonna go 8 times 7, 7,000. So that's 56,000 in revenue, plus potentially turning those rooms at the top. You could maybe get another 14k. So 56,000 plus 14,000. I mean, 70k is definitely going to be the max number you can get in there. Rates and taxes will be a little bit less. Insurance will be a little bit less. Water and refuge will be a little bit less. Everything will be a little bit less because this is a smaller deal. But definitely not 3.5 million in terms of asking prices. Should be like a 3 million rand purchase with 250 as my transfer. Okay, yeah, that looks fine. Let's see. Come on. Give me a decent return. Okay, it meets the minimum threshold, but that's with cash. I'm not happy with that. So I'm going to go with 2.8 as my offer, yeah. And now push finance up to 70%. And now my return should be decent. Yeah, 18%. I think that's fair. I wouldn't go much less than that. So this deal makes a little bit of sense. Not my favorite. Asking price of 4.5. You know, we're going to come in at 28 or 2.8 million, which is a 37% discount, which is substantial. I've put a thick provision for renovations because I anticipate doing a lot of rework. In terms of total revenue, we're looking at 70 grand per month. It's not a very high performer. That's only giving a 20% gross yield on asking. We're going to take just shy of 2 million from the bank, leaving an equity position of 2.24 million. In terms of the returns, we can see that our cash flow number is going to be 65 for the year, which is not horrible, but for 2.24 million, that's not a great yield. I mean, yeah, of course, there's a lot of bank finance that obviously has a big impact on this. But internal rate of return is decent. It's an 18% internal rate of return with 4.5 million of MPV. So now I just have to put all of these numbers into a presentation, send it to my partners, and essentially get the go-ahead to move forward and put some verbal offers down and see, you know, which one of these sellers are ready to budge. Tabo, good day. I will be charged to pay transfer fees and attorney costs if I purchase property under 1 million. So that's a good question, Tabo. You've got various levels of cost. So let me show you what I mean. This is also something you can work out on the app, which is quite handy. But you go here to calculators and you go to transfer fee calculator. So here you can work out your numbers, right? So let's say you're doing a 1.5 million rand transfer. It's a sectional title. The seller's not registered for VAT and you're buying it in a PTY. Here you can now see what your total costs will be. So you've got a total transfer cost of 86,000, and that's broken up into 2 areas. So you've got your bond registration costs and you've got your transfer costs. Those are your two amounts, okay? So bond registration is going to cost that much. That's how much the bank charges to register. Then their initiation fees, they've got petties and posts. Then transfer fees. So this goes to the bank. That's the bank's cost for registering the bond. Then you've got property transfer costs. This is what the attorney charges. Now, if you're going to do a cash purchase, you don't pay this. I mean, obviously, if you're going to do a cash purchase, you don't pay this amount. If you're going to get a finance purchase, you pay this amount, right? Then the transfer fees. Now, the key thing, the question you've asked is, do I still pay transfer fees under $1 million? So under 1.1 million, you don't pay this number here, transfer duties. But you still pay transfer fees. So as an example, I'm going to put in here 900,000, which is under that 1.1 million rand mark. As you can see, your transfer duties is 0. You don't pay any duties on that, but you still pay transfer fees. So sometimes what developers will do is they'll say, because it's under 1 million or 1.1 million, you don't have to pay any transfer fees. It's all included in the sale. Yeah, but it's only your transfer duties. It's only your taxable payment of transfer to SARS. You still have to pay your attorney. Your attorney's not going to work for free. You know? But yes, you're right. Under 1.1 million, you avoid transfer duties. That's what our legislation allows. And when our finance minister does his next budget speech next year, it's likely that he'll push that number up to 1.2 million or 1.3 million. That's always something that they reassess as time goes on. Okay. It's been a plum-pleasing pleasure and a privilege to be your host with the most. I hope you've learned something. If you do want to know more about, this coaching program that I briefly mentioned in the beginning, that's where I sit with you on a one-to-one basis and I help you make your first or next purchase. I can help you analyze deals, assess areas for risk and yield, how to sign offer to purchases to protect your interest and to ensure that you are able to exit the deal legally if something goes wrong. I can help you with due diligence, getting proof of income, proof of expense, ensuring that this deal does make financial sense, and then I can help you with transfer, finance, as well as management to ensure that the asset performs at the level that you expect or require it to. Obviously, my time does come at a fee. This isn't a free service. I do have a free YouTube channel which has a lot of content, so make sure to subscribe. But if you want to have a fast-tracked approach to getting a really good result with minimal risk, a coach is there to do that. That's what I do. I help people quickly get into the property market with minimal risk. So if you do want to know more, hit the link in the comment section below or in the description. Unfortunately, this video will be posted to my membership channel first and only to the general population probably in a week or two's time. So if you do want to have access to exclusive content and you do want to support my content creation journey, please consider joining my membership channel. I don't really make a lot of money from YouTube. I'm a passionate content creator. That's why I keep doing this. It's not